Well, g'day there traders and friends right around the world. Thanks for joining me on this Monday afternoon market recap. Quite a lot to discuss and to summarize in this shortened afternoon announcement. Before we get into the analysis, of course, of the top 3 US indices, followed by recaps and management of our top 13 individual trade list, a couple of announcements which I need to bring to your attention. First of all is that a lot of our shares in our top 13 individual trade list, which we cover in Pro, are reporting earnings this week. It begins with Apple at the close of Tuesday's trading session. We also have Amazon reporting earnings. We've got Caterpillar reporting earnings. Facebook and also Google are really the major ones this week which we're looking at. So for the majority of trades regarding those individual stocks, I'm going to be providing students in that pro private area with trade updates similar to that of Netflix, which I put out in the YouTube domain last week. We're looking at earnings gap and go type trades depending on how and where of course the stock price gaps to and where the structure in regards to support and resistance are at that gap. So please stay posted for that. Secondly, before we get into the analysis, that obviously there's the Federal Reserve meeting this week taking place on Tuesday and Wednesday. The announcement of what comes from that meeting or that engagement is going to be made public during Wednesday's trading session. So I do expect at least the market to react. Perhaps a knee-jerk reaction, maybe more so even an intermediate reaction, putting the market into some form of a direction come Wednesday. So as we look at the markets and we see the apex of potentially a symmetrical triangle taking place on the Dow Jones Industrial Average, taking place on the S&P 500, and not so much on the NASDAQ, but very close to that resistance pivot point, perhaps the Federal Reserve meeting and the announcement, the subsequent announcement coming out on the Wednesday is really going to at least put this market into some form of a direction. If not, of course, it's going to come down to the earnings reports being announced by these major leading stocks, which of course trade on the US markets. I think we've covered more so the fundamental or sort of the economic side of the market. Let's get into some of the technical side of the market, because this is my passion, this is my forte. Here we have a look at the Dow Jones Industrial Average. You can see here in some form of symmetrical triangle, all three markets today tried to gap down. They pushed lower, but they ended with some pretty decent buying wicks. Again, it doesn't count for much because we are still inside the apex of this symmetrical triangle. We need to remain as neutral as possible, and we haven't seen the clear directional break. All we're simply doing is adding to the volatility, which has already taken place throughout the month of January 2015. It's really been quite a hard type of time to be trading the market. You can see also on the S&P 500, very similar type of chart pattern, more so on the monthly and also on the daily candlestick. You can see we tried to push and sell off from this upper resistance level right here, but we ended the day quite strong. We rallied during the end of the session and we closed up about 5 points on the S&P 500. Now the NASDAQ candlestick is a little bit similar. We didn't so much gap down, we didn't push down as far as the other two markets, and we closed almost above the highs of Friday last week. So the NASDAQ is showing relative strength compared to the other two markets. It is above resistance, unlike the Dow Jones Industrial Average and the S&P. So I'm still a little bit skeptical on how much upside we have, at least until Wednesday's trading session. So please sit tight, if possible, on some individual trades. When we have a look at some individual trades, let's begin with Apple. I put out the update over the weekend that if Apple moves up above Friday's candlestick, of course we got in, over here at $111.52. It should be a really good opportunity for you to get out of Apple as we lead into earnings being released, of course, Tuesday afternoon. Today was the perfect candlestick for you to exit out of those positions. Although we didn't hit $114.52, we came awfully close, and there was ample time, ample opportunity for you, of course, to receive an even greater premium on selling those calls, exiting out of those positions during Monday's trading session. If you are in this individual trade, I would move my stop up and place it. Let me just do this for you. I would literally place it, if I can get the right stop up, right below the low of Monday's candlestick. If this doesn't get hit during the day, or if you're looking at Apple and it's not going to get hit, please exit out of the trade at market. Do not hold over earnings with Apple. So this is a very nice trade. It's rewarded us if you did get out of it on Monday. Congratulations on that individual trade. Amazon today had a bit of an inside day spinning top. Very nice trade. Again, we were looking at a similar exit. We got exited out of this trade at 307.72. Personally, I missed out on this trade, but again, a pretty decent move. It was only, roughly $5 of intrinsic value in the way of profit. But again, you've exited out of the position. You adhered to your stop. Another profitable trade, and you don't have to worry about trying to exit now moving into earnings. Baba today is still holding what seems to be some form of a stair-step rectangular type pattern. We've got very, very nice structure on Thursday, Friday, And now Monday, you can see that we've got that upper ridge, we've got that resistance level. This looks as if it's going to continue to the upside. I'm very excited about the possibilities of Baba. Baidu today is more or less acting the way which we wanted it to if we could have chosen it to retrace. What we've seen is some form of a bearish engulfing candlestick pattern. A lot of people might be looking at this and saying, look, this is going to absolutely tank. And there's a good chance that maybe it will, but I still like our argument, which I put forth to you over the weekend in that pro analysis class. We're starting to get that structure which we wanted to see if in fact it just didn't simply break out above 237. So as I'm recording this analysis right now, very good opportunity on Baidu to start implementing what I spoke about over the weekend in the way of looking for that one white candlestick at this resistance level turned possibly support. Keep a close eye. Again, pay attention to the detail. Not a lot of volume relative to this most recent upswing. I'm still really liking that Baidu trade. Caterpillar today had a little bit of a gap down, just like the markets to begin the session. You can see we had a very, very, very tight stop. Only $1.60 of risk on this 86.72. We got stopped out today for a losing trade on Caterpillar. Hey, I'll put my hand up and say it was a losing trade. That's all well and good. Earnings is coming out. You can see also on Tuesday. So it's very good, very timely that we got stopped out of this trade. We more or less had to pretty much exit this no matter what on the Monday. So that's really good to see. FAS is starting to build that structure. We're still looking at some form of potentially a descending wedge. No real net movement right there. There's no need to really update you. Facebook again today, no pattern whatsoever to trade. Earnings is coming out, so stay patient. The same is true with Google. You cannot trade Google anymore. It's too close to earnings. Just sit tight on that particular trade. Look at GoPro. We've been speaking about the potential for what we call a bear flag. It hasn't triggered just yet, but stay vigilant on this particular trade. Again, not very good selling volume, but we are still in what could be that actual structure of the flag. So we haven't technically broken out of it. We're still very, very neutral on GoPro. Today, Halliburton started to break out. Now again, by all means, or any stretch of the imagination, this is not how I expected Halliburton to break out of this Bollinger Band squeeze. At the end of the day, we are starting to move in the upwards direction. We can all agree on that. Today, the candlestick is some form of a hangman. Now, this can be interpreted essentially two ways. It is technically a bearish signal, but at the same time, we have that lower wick. We have sustained buying pressure, and it's coming in at this old resistance level, which has been resistance since December 2014. You can see this level right here. We've got the lower wicks, and today, unlike on Friday, remember on Friday, the price of Halliburton was really tanking in the afternoon, or as at Monday, it's the exact opposite, right? We started the morning quite weak, but then we started to bounce. We were in this trade, pardon me, from 41.22. It has moved more so profitable. So if you are in this trade, bring your stop up, all right? Bring your stop up. It was at 39.64. That was my original stop. What I've done is I've added an additional stop now at $40.50. So straight away, as a technical trader, I'm limiting my risk as a professional trader, as a professional swing trader. I'm taking down my risk profile from 41.22 to 39.64, and now I'm cutting it from 41.22 to $40.50. So you can see again, I've more or less halved my risk from where it was on Friday. So you need to keep managing the trade when it moves in our favor. Again, re-entry at 42.05. Sorry for this. This update's been a little bit withdrawn, but I'm doing it for your benefit. Netflix today again is continuing in the upside. We didn't necessarily have a trade on Netflix. There's so much overhead resistance. We were really waiting for this to pull down. I can't really give you an update on Netflix. Tesla today coming very close to our entry at 208.80. We do have earnings coming out. Shouldn't get in the way of this individual trade. And to conclude with, we have Twitter. Appears to be almost breaking out of this descending symmetrical sort of triangle. No great move at the moment. There still is a lot of overhead resistance, which is going to be bearing down on the price of Twitter. But there's a decent trade set up nonetheless in Twitter. I'm paying attention to these Bollinger Bands. If we get any form of a squeeze, I'll keep you updated on that particular trade setup. Thanks a lot for watching this video. Please send me any emails which you may have. Other than that, traders all around the world, thanks a lot. I'll see you most likely on Wednesday afternoon, unless the market does something incredible during Tuesday's session. I'd more so like to recap, of course, the Federal Reserve outcome and how the market, of course, interprets that fundamental data. All the best, ladies and gentlemen. Have a good night. Goodbye.